Hello everybody, in this video I will compare investing in the ETFs VOO, which tracks the S&P 500, and SCHD, which is a popular ETF that targets companies with a strong history of paying dividends. At the end of this video, I'll reveal which ETF I prefer and what percentages of these funds I currently hold in my portfolio. So why would you want to invest in VOO? Well, VOO is a Vanguard product that tracks the performance of the S&P 500 index. VOO returned a staggering 26.32% in 2023 as it bounced back from a dismal 2022. VOO offers broad market exposure as it tracks the S&P 500, offering a slice of the top U.S. companies across various sectors. VOO has been around since September of 2010 and has over $980 billion in assets. Taking a look at the holdings breakdown for VOO, we can see that technology has almost a 30% weight at 29.81%. Next is healthcare, financials, consumer cyclical, communication, and industrials. The top 10 holdings in VOO account for 30.81% of its total assets and include very popular companies such as Apple, Microsoft, Amazon, Nvidia, Alphabet, Meta, Tesla, Berkshire Hathaway, and JP Morgan Chase. This diversification reduces the risks associated with individual stocks and allows investors access to owning businesses that are a huge part of the American economy. Historically, the S&P 500 has shown strong long-term growth, making VOO appealing for investors seeking capital appreciation with an annualized return of over 12% the past 10 years. With significant exposure to the technology sector, VOO is attractive for those who believe in the continued dominance of growth and potential of tech companies. VOO boasts a very low expense ratio of 0.03%, meaning you only pay $3 in fees for every $10,000 you have invested annually, which is crucial for long-term investing as lower fees can significantly impact net returns. Some things to consider when investing in VOO is that it's subject to the ups and downs of the market, especially so with its heavy tech sector weighting. Compared to SCHD, VOO offers a lower dividend yield, which is currently about 1.45%, which might not be ideal for income-focused investors. So why invest in the Schwab U.S. Dividend Equity ETF, or SCHD? Well, SCHD tracks the Dow Jones U.S. Dividend 100 Index, which focuses on high dividend-paying U.S. stocks. It is a very popular exchange-traded fund designed for investors who seek income through dividends as well as potential capital appreciation. This ETF is a product of Charles Schwab, which is a reputable name in the financial services industry. SCHD had a bad year in 2023. It gained only 4.57% with dividends reinvested. Comparing this to the VOO's 26% gain, this looks really bad. But just because SCHD didn't perform well in 2023 compared to any other tech-heavy ETFs doesn't mean this will continue. I'm not saying that I think tech and AI will fizzle out anytime soon, and I will talk about how I'm investing in those sectors later in this video, but it's important to remember that just because the SCHD had modest returns in 2023 doesn't mean this will continue long-term. I know it's human tendency to think that recent events are more important than they actually are. It will continue into the future. But this is like the financial equivalent of seeing one cloudy day and concluding that the sun is never going to shine again. SCHD targets companies with a strong history of paying dividends, making it attractive for income-seeking investors. With the current dividend yield about 3.5%, dividend-paying stocks are often more mature, financially stable companies, which can offer more stability during market downturns. Another benefit is that SCHD not only provides current income, but also has the potential for dividend growth, enhancing the yield over the initial investment over time. SCHD has been around since October of 2011 and has over $52 billion in net assets. The top 10 holdings for SCHD account for 40.46% of total assets and includes names like Broadcom, AbbVie, The Home Depot, Texas Instruments, Amgen, Merck & Co., Cisco, Chevron, Pepsi, and Coca-Cola. Looking at SCHD sector allocation, we can see that industrials make up 16.83%, financials over 16%, healthcare over 15%, consumer goods, technology, oil and gas, consumer services, basic materials, telecommunications, and utilities round out the top 10. Some things to consider for SCHD is that it may have higher concentrations in certain sectors like industrials and consumer goods, which can be a risk if these sectors underperform. Also, you should consider that SCHD might have lower capital appreciation potential compared to VOO, given its focus on dividend-yielding stocks, although it has returned about 11% yearly with dividends reinvested over the past 10 years, which is not far behind VOO. What about the benefits of investing in both VOO and SCHD? Well, holding both VOO and SCHD can provide a well-rounded exposure to both growth with VOO and income with SCHD. This approach diversifies not just across different companies and sectors, but also across different investment strategies. This combined holding can mitigate the sector-specific and market-wide risks associated with each ETF. Having both ETFs in your portfolio allows investors to adjust their strategy based on market conditions and personal financial goals. When you're looking at market trends, some things to consider is that VOO may perform better in a bullish market where growth stocks, particularly tech, are thriving. SCHD, on the other hand, can offer more stability and regular income in a volatile or bearish market, as dividend-paying companies are often more established and financially stable. VOO may be more suited for long-term growth, while SCHD could be preferable for those who are seeking regular income and moderate growth. Their investment time horizon is crucial. VOO might be more appealing for a younger investor focusing on growth, while SCHD could be suitable for someone closer to retirement prioritizing income. Another thing you want to look into is tax considerations. Dividends from SCHD may have different tax implications compared to the capital gains from VOO, depending on your tax bracket and jurisdiction. Both VOO and SCHD offer unique benefits and cater to different investment strategies. Your choice should align with your financial goals, risk tolerance, and investment horizon. For me, I choose to invest in both VOO and SCHD. The majority of my investments are in VOO or similar ETFs tracking the S&P 500, but I've recently started a position in SCHD that I plan to increase significantly over the next 5 to 10 years. I love the thought of passing this income-paying ETF onto my son someday and having it provide passive income for him. Thank you so much for watching. If you haven't subscribed already, please consider doing so. Also, if you're not sure what to watch next, check out this video right here. I think you'll really enjoy it. Take care, and I will see you next time.